Welcome, everyone, to the Insurance and Beyond podcast. Guys, we are super excited to be here. Last week, we talked about changes that's going on in the insurance industry. We talked about all the different types of market changes. We talked a little bit about the hard market changes. And, if you really want to kind of dig into a little bit more in depth on revenue and some of the hard market changes and concepts, you'll want to go back and listen to episode 1, episode 2. This is actually part 2 of a 2-part series on compensation and beyond. So if you're listening to this one right now, you'll want to go back and listen to episode 3, where it was really the start. It was the concept of compensation for your agency on building out your compensation, the need behind the need. Today's episode, we're really going to go into what does that compensation look like? How does that look like for not only your producers, but maybe your staff members, and really some ideas on the ways you can structure your compensation, because there's a number of ways to skin a cat. So without further ado, we're going to launch into it. But maybe before we do, see how our days are going. So I'd like to introduce again Chuck and Mike, our co-hosts. Chuck is our forever Florida Gator fan, and Mike is our Marshall fan. So, this is actually week 0 of college football. So we're all, I'm a huge Georgia fan. So this is really what makes this dynamic a lot of fun.
Yeah, absolutely. If we go 3 months sometimes without a podcast, which we won't, just realize that one of our teams are losing really, really bad. So,
well, Mike would have just tears kind of streaming down his eyes. His face would be a little bit red. May slur his words. You never know.
You never know. I mean, and that's only at 10 a.m. before I drink anything. That's just normal. So,
well, yeah. In preparation for this week, I decided last Saturday, after watching the other team lose in Ireland.
That was great, by the way.
Yeah, I know it was an awesome game.
Sorry to any Florida State fans that are listening.
I literally haven't had a drink in preparation for this Saturday, so I am saving everything for Saturday, and I am going alcohol-free until sometime like 7:30, 8 o'clock in the morning on Saturday.
This isn't the week of Lent there, Chuck.
My liver woke me up the other night and said, "Dude, football season's right around the corner." It's like, I'll give you a breather.
It's like, oh God.
Oh yeah. And now they serve in the game, so you got 3 quarters you can drink during the game. So I don't remember very many fourth quarters. Well, actually, I do. I was just kidding. Wink, wink.
Man, the only problem when they serve in the game is a man would go broke.
That's right. $15 beers get for Miller Lite and Bud Light get kind of expensive for for watered down beer. Yeah. Now, kudos to you guys that like the Natty Lights and stuff like that. I've gotten to the point in my life to where I like a little bit more flavorful beers, but it kind of is what it is if you like the Bud Light and Dilly. But it's each their own, right, guys?
I like my beer that tastes like bourbon.
That's right.
That's the beer I like. Beer. That's right.
That's West Virginia right there, buddy.
Like
We'd be waking up next Thursday.
That's right.
All right, let's get rolling.
The times for college football this week are really interesting because we have Georgia Clemson starting off with the Affleck kickoff at 12 p.m., which is, I gotta be honest with you, that kind of sucks. Our tailgate. So I'll actually be at the game. I've got taken my daughters and my son to the game, and the tailgate starts at about 8 a.m. So it's all about the brunch, mimosas, Bloody Marys, all those fun things.
Well, as odd as it sounds, we are in a heat streak in West Virginia. We are over 100. We've got a heat index yesterday of 109. All this week, including Saturday, we're over 100. So I've decided that I'm watching the game at home.
Well, I'm leaving Friday to get up there and get settled, and in honor of Devin, well, it's what we do every Saturday. We're starting our tailgate around 8 o'clock on Saturday because our game starts at 3:30, which is early.
Yeah.
Yep.
It is. That's an early game.
LSU's going to be a little bit.
Sorry.
I was going to say LSU will be different. It's an 8 o'clock game, so those are long. But let's get rolling.
Yeah, let's get rolling, guys. We're going to get into compensation. Look, I want to let just like last time, I'm going to let Chuck kind of start us off, kind of go down the road with some of the different compensation ideas. Maybe talk a little bit more about really kind of where we left off last week. We were really kind of talking about the separation between sales and service. Kind of the benefits of doing that. Really having your service person as almost like your processor for your sales staff.
Yep.
And then one of the other benefits of that is that in the event that your producer leaves, which at some point in time most producers do, right? Especially if they're good enough, they go and start either work for another agent to look for higher compensation, or maybe they go start their own insurance agency, then your book is at risk. But by going in and allowing your service person to be the main point of contact and not allowing your sales agent to really go in and do the servicing, you maintain the relationship within your agency, which is really important because, if that producer leaves, you don't have to worry about them going after the book of business because they don't have the relationship. It's like I went and I sold a commercial policy to a guy, sold it to him 5 years ago. I haven't spoken to him since day one of that policy, but they've been speaking to Abby for the last 5 years. The relationship is with Abby in my office, not with the sales guy.
Yeah. When I first got
100%.
started, the agent that hired me as an associate, as he was trying to teach me, one of the things he said was, if you run into someone and you ask them, hey, who do you have your insurance with? And if they say State Farm, they say Progressive, said that is a target client. They don't have a relationship.
That is correct.
If they say, I got my insurance with Devin, okay, there's a relationship. You're going to have a harder time getting that business. And to echo what Devin is saying, I could not tell you how many times that I've run into someone and we get to talk and they're a client of mine. I've just never met them personally, but their agent is my office manager. So to your point, Devin, they've got the relationship. The relationship is what matters.
Exactly.
You guys are both on point, and it really drives to, number one, efficiency. So you're running a really efficient shop. Go, hunt, kill, drop, leave. Service person takes from there. And then when you start looking at the compensation structure, kind of going to that next level, what gives you that behavior and the ability to have them just go hunt and kill? Well, number one, by nature, ADD, short attention span, OCD, all that above are your greatest sales folks. So the least amount of things you have them do, the least amount of obstacles they have before that next call. So that's why it's so important to just say, pick up the phone, sell something, pick up the phone, attempt to sell something each and every single time. Once they hang up the phone, go to the next one. So how do I do that? So one of the ways you do that is around this compensation structure. And what we found in the beginning is a lot of people like to go straight to commission only, and I'm going to hire the best staff people, and they're going to drive 100,000 in premium each month or 50,000 in premium each month because that's what I have in my business plan. Here's the reality. Compensation structure is really broken into 3 different main areas. It is a base, it is a commission, which is what I call a variable compensation mode, and then you've got this bonus mode that comes on the end. And they kind of all play together because they're all driving behaviors. So, for instance, take a slider. So, it's like, what's the perfect base to commission ratio when you're getting started? The first thing is everyone's got to look at their book. They got to look at their personal book. They got to look at their business books and figure out what can you afford, how can you afford it? And then you got to give enough so they can stay, but not too much so they're comfortable. And that's really kind of the rule of thumb.
Right.
So you start off with that base. The base is important. You can do it on a draw. Draw basically means trial. Some people keep the base there forever just because they want to keep folks going and they got things going on. But depending on the task that you have them do, that slider goes from 100% base, which means who holds them responsible when it's 100% base? You do, the agency owner.
Right.
Who holds them responsible when it's 100% commission? They do, based on their sales. So that slider can go anywhere from 0 to 100 in either direction. and their consistency of sales drives it to the 100% on the commission side. Because what you're really looking for is the ability to have them have consistent revenue coming into your agency. The more consistent that is, the more you can push it over to the commission side only. So how long should you stay in that base mode? You know, I've heard 30, 60, 90 days, a year, 6 months. It doesn't matter. It's what you feel comfortable as an agency owner, that they're gravitating and grabbing the concept of what they're doing, and you're feeding them enough leads to where they have no excuse. One of the big things we used to play with is, you know, sometimes you celebrate the sale. And we had an agent like, oh, if you have a day where your staff person sells 4 policies or 4 items, remember we're all captives at one time, but 4 items, 4 policies, doesn't matter. Let's say 4-item policy. Was that a good day? That was a great day. Like, what made it a great day? And he says, well, they sold 4 cars. I'm like, well, what happens if someone came in at 9:30 a.m., they had a 4-car auto, your salesperson closed it, and you started celebrating then? What's the likelihood of you having 5, 6, 7, 8, 9 cars? And he just looked at me, and I said, all right, so let me ask you this question. This is a ratio, correct? Yeah, so what's your close rate? And he's like, my close rate's about 15%. I said, so wouldn't it be a better metric to have your staff contact 10 people, 15 people, whatever that number is for your agency every single day, knowing some days are going to have great days, some days are going to have poor, underperforming days, but overall, they're going to have a 16% close ratio, and they can't debate it. They either called them or they didn't. You know, if you stay on the sales and how successful they were on the outcome, you're spending a lot of time celebrating sometimes luck as opposed to that repetitive behavior that you want over and over again, which is calls. And the other reason we do it, we said, hey, why else would you do it? Well, at the end of the day, if you say every day I want you to contact for the purpose of a sale 12 people. Now, it's a bad day if I contacted only 8 for a sale. It's a great day if I contacted 13. So at the end of every single day, I know I did what I was supposed to.
Right.
I'm supposed to contact 12 people a day, regardless of that. And that's how you start to see that curve bend. So the compensation structure, if you stick with contacts for sales purposes, and I keep saying that because they'll tell you about contacts all day and how people weren't home and calls and dial outs and all that. Contacts for the purpose of a sale. Once you get that rolling and that number rolling in, you'll be able to shorten your time that you're paying them that base. And what I always say is run a phantom payroll on the back end. And you can literally go all the way up to 100% of first year's commission, because if they're good enough, you pay them the first 6 months commission on the auto, the first 12 months on the home, and then you're going to get it on a renewal basis. You will be fine. And you will be able to pay them enough. Like, well, how in the heck can I afford that? Well, what are you doing when you pay base? You're paying them money for sitting there whether they sell something or not. So that's how you can afford it. So don't get caught up into, you know, those are 2 different things. That base also works best for your service folks who are supporting those. And that's kind of how it's blended. And you got to take those 2 components and put them together. And we saw about the max that you could have a service person support a salesperson is almost a 3-to-1 ratio. Because once you get over that, you start seeing everything kind of unwind. And that's kind of how that plays out. Then the bonus component. So we talked about commission, we talked about base, let's talk about bonus. The bonus arena comes more on the service folks side, because at the end of the day, everyone is a salesperson. It's just how they get that sale. Whether it's cross-sell, whether it's a direct sale because you were calling them on a follow-up call or something got sloppy on the salesperson, doesn't matter. But they should always have a compensation minimum that they need to do when they're talking to the customers. And what you end up doing is you tie their results to how well the salespeople they're servicing are doing.
Mhm.
And here's what I mean by that. What I loved are tiers. So, salesperson A, if he hits 10,000, your bonus is 250. If he hits 15,000, your bonus is 500. If he hits 20,000, your bonus is 750 or 1,000. It all pays out. It doesn't matter what the number is. The reason you do that is because at the end of the month, now you have a service slash salesperson and a salesperson trying to get that number up for the salesperson. So they're driving premium, your service person's driving that tiering. And here's the
Right.
beauty of it. The best thing that could ever happen, and it happened time and time again, is when you get to 14.98%, they didn't quite hit that 15, and they're going to look at you to pay it, and you're going to want to pay it. You cannot pay it.
Correct.
Yep.
That is
If you
correct.
don't pay it, they will never miss it again. It will be 1501, but it's that painful love that you
Mhm.
have to do that first time and make that one work.
Absolutely.
And that's only hard the first time.
It,
Okay,
it,
so that it's hard the first time because, to your point, it won't happen again,
it won't happen
and
again.
it'll make an example. So there's
Right.
times when there's 3 salespeople, and one of them got below it. To your point, 14.98. The others may have been over 15, but they see that they did not get paid. Now you've made an example. The other ones are going, I'm never getting.
Correct.
So there's multiple features that's going to come along with holding true to following through on not doing it.
I have a real life story that goes along with this. So I had a producer in my office, and one of the things that would happen is he would always kind of sandbag his stuff for the next month,
Mhm.
right? At that time, we were still a nationwide agency. We were still exclusive. So our number for the agents was $20,000 a month in new business premium. As an independent agency, our number is $40,000 a month. It's doubled, and the reason it's doubled is because it's you have more access to sell more products and more business, and so we can say yes to more clients, right?
Well,
So
your conversion rate is higher. So it's just,
exactly.
I mean, if you had a 30% quote to bind number as a captive with one carrier, you bring in 5.
Correct.
Normal math will make it so much better. So yes, it's
Exactly.
easy to double that.
So what we did is I went and I took their number. I took the agent's number because I got tired because I had a couple of agents that were doing this at the same time because they saw him doing it and they see me not actually doing anything to him for not hitting his $20,000. And like literally he would get there, he would be like 19,950, right? I'm like, dude, can you give me another $50? And there'd be like a week left, and his Friday number at the end of the month would be 19,950. And then all of a sudden, for the start of the next month, it would be $4,000 on like the second or the third.
Right.
And it's like, dude, you couldn't do that. So what I did is I went and I took the monthly number and I tied that to what I referred to as the base bonus, which would have been kind of like the salary, but I didn't call it a salary because these guys are 1099s, right?
Mhm.
So I called it a base bonus. And so let's just say for easy math, the base bonus was $500 for every $5,000 of premium. Okay. So if he sold $15,000, then there'd be a $1,500 base bonus. If he
Mhm.
sold $20,000, there'd be a $2,000 base bonus. Now, once they went over $2,000, the base bonus would still be there, but it decreased out. So it wouldn't, because at the end of the day, if you're the reality is when you're looking at $20,000, a $500, a $2,000 base bonus doesn't really make a whole lot of sense. Obviously, that wasn't the number, but
Mhm.
just easy math, right? So, but if he was at 19,950, guess what? He's not only losing out on the $50 on the commission side, right? But
Mhm.
he's losing out on $500 of base bonus. So once I instituted that base bonus program, I cannot tell you that, he never not hit it. He didn't hit it one time, right? Did that whole $19,900 and he looked at his check and his check was short $500. Like, what happened to why is it short? Well, dude, you
Sure.
only did $19,900. And this is one of the things that you have to do because your sales guys are very ambitious. But what they'll do is they'll go in and they'll take premium, they'll take policies that maybe is for the next month and they'll add it to the current month,
Yeah.
right? So that they can make sure they hit that number. And so what I would do is I would say, okay, this is off of verified business, right? So I would go in because I would pay on the 15th. We have verified business of all the new business sales that has come in with all the carriers.
And when you
Right.
say verified, you mean processed. It has processed. There's a
verified
policy
business.
number. Not that I
Issued.
submitted it yesterday and it hasn't processed yet.
Issue.
You've
I've
got
had
it. Yes.
3 producers I've had to fire because they would go in there and they would put in the fact that they sold this. So they're thinking that they're going to get a base bonus based off of this number. And they were fabricating the policies, and that's theft. So obviously let them go, because there's no point in having dishonest sales producers inside your office. You just don't need that.
Well, and that's just the beginning. I mean, once that happens, that'll snowball very, very fast.
Yep.
Another thing we did, it's kind of cool when you're working with hundreds of folks who are very creative. But another thing we did is we did a Friday payday, cash only, right? So when you have those folks who are stragglers that just hold things in, you got to go from back to behavioral mode. And, I don't care how fast I'm going as long as I'm faster than you mode. So what we would do is we'd have like $100 bills. Now, size of the agency determined how many $100 bills you have. But the whole point was, every Friday, top producer got cash in front of all of the other producers.
Yeah.
And it was very theatrical because it was like, boom, say something. And what it would do is it would piss off the other producers.
Well, they got FOMO at that point.
Well, but what you're doing is you're shortening your time. So, for instance, you got 12 times you can hold off on a big month-end close. Now you shortened it to 52. So what you're doing is you got these little itty-bitty incentives, which comes out of, wherever else, and then you go from there. But to Devin's point, to everyone's point, the thing you got to be most cognizant of is when you allow someone to get something they did not earn, you will only lose your top producers because you're playing favorites to the weakest link.
Yeah, correct.
You got to let the folks who are weak be weak and get paid accordingly, and make sure you are really, really supporting those folks. There's a reason when Peyton Manning was, starting quarterback, that he got paid more than the backup quarterback because he was producing. Another thing we see going over to bonuses is everyone likes these team bonuses, which I think team bonuses are great. Agency had a great month. We had a great month, and we're going to pay out a bonus, and it works. So you could have an agency achievement milestone bonus at any point you want, whether you want to do it monthly, quarterly, semi-annual, doesn't matter. But here's the beauty of it. What you do is have everyone's payout be based on their contributions proportionately. So if person A does 70% of the sales, they get 70% of that $1,000, so they get $700. If the next person did 15%, they get $150, and then on and on and on. And what that does, it does 2 things. Number one, you don't have to worry about your agency premium goals, because if you have the right group, they spend more time trying to make sure that it's equally split than they do the agency achievement. So that 70 person is going to bring up those folks who are going to be at the 35, 40. And what we'll see is if you have 4 staff, they're going to try to keep that as close to 25% as possible. And you post that bad boy every day. It stays in front of them. And then it's a big enough pot where you want to, really pay it out, and you're going to benefit from it. It's a wonderful thing. Right. And then you can have a side pot for your support staff. And you can have that one blended with retention components, which, AKA in the easy world, it's called cross sells. So how many things were sold? What's your percentage of cross sell? Don't really do it on retention, because your retention is driven by A lot of times the brand, the carrier they're with,
Yes.
the fact that they're not
Yes.
non-renewing, once people are there, they're going to be there unless the insurance company says, "Hey, it's time for you to leave." So cross sales are really what you pay for in a retention arena when it's around sales.
Correct.
Yeah. So, a couple points there I want to bring up. First of all, Chuck is exactly right talking about the base. A new salesperson coming in, they've got to find a way to live, but not be comfortable. If
There
they
has
don't
to be
have the
pain.
hunger, right, there's got to be a little bit of a pain point. Now, the point I want to make on that is geography has a big play in that.
It does.
So
100%.
we've got Devin just outside of Atlanta. We've got Chuck outside of Tampa. I'm in West Virginia. I may have a conversation with Devin, and he may say, "Man, my base for my starting people is $50,000 because of cost of living, And Chuck may say, "Man, I'm at 45 as a base, for 1 year." I may say, "I could do it for 20." So when you hear numbers, don't necessarily hear the number, hear the reason behind the number.
Correct.
And make the number according to your area. But you've got to make them uncomfortable a little bit. They've got to be hungry or they're going to stay on the couch.
That's exactly it.
Yeah.
And
And talking about cross sells, one of the things I do in my office for my inside folks that are predominantly service, because they are the ones that talk to the clients. They're the ones that's going to cross sell. They're
Right.
the ones that someone gets a payment in and they pull them up and say, "You know what? We could save you money. We don't have your home." So they get paid a base. That's their job.
Right.
I'm to control them. That's what they do. But I bonus them on new sales as well, even though they're not salespeople. Now,
Correct.
the way I've done it, according to what Chuck was saying on the 15 and 14.9 or, whatever. I'm sorry, Devin, what you were saying. I do a sliding scale. So 1 to 5 new policies for an inside service person per paycheck gets $10 per policy. Well, 6 to 10, it goes to $15, but it retros back to policy 1. 11 to 15 goes up higher, and so you see where that goes. Well, if you're at 10 policies, which is $15 a piece, it's $150.
Correct.
One more policy puts you at 11, then it goes to $20.
Right.
So you went from 150 to 220 over one policy. So to that example you gave earlier, Devin, it's like, wait a minute, you're sandbagging the last of the month. I'm saying the same thing to my service staff on sales, going, you're one policy away. I don't care what policy it is. I've conditioned my staff. Sales is a muscle. The more you do it, the better you get at it. And you don't look at, I sell auto or home because it's a higher ticket. Sales is sales. It becomes natural. Sell a motorcycle policy. Sell a side-by-side policy. Renter's policy. I don't care if it's
something
20,
somewhere.
It doesn't matter. Give me a policy. That puts them over, and then they didn't just lose that $15. They lost $75. So a couple points I wanted to bring up there on that. Service staff, Chuck was talking about that on the cross-sell. Find a way to bonus them too, but not like your sales staff. Use a different bonus structure.
Correct.
And then highly, highly, highly do research in your geographical area because it will save you money. You may listen to this podcast and go out and want to overpay somebody. Then they're not hungry. So don't listen to the number. Look at the reason behind the number. Do some research in your area and pay accordingly to that.
Yeah, the easiest way to do that is for your sales rep, just figure out what the total comp payout averages are for sales in your area. And you don't necessarily have to do just insurance. And then take and apply the commission-based ratios towards that number. So that can kind of give you an idea of, and the top end is going to be what you want them to achieve. The bottom end is going to be 0. So if that number you're trying to get them to is $35,000 a year, use that as your number and then tweak it. But then know that if they go to 40, 50, 60, that's what you're going to show them on a piece of paper because you got to get them to want that $60,000, not the 30.
Correct. And, guys, as you're going in, you're building out your compensation plans. It's important to make sure that you're building out your compensation plans based on your agency's goals. What is it that your agency needs to do? It's just like these carriers will go in and they'll say, hey, you know what? We don't really want dwelling fires, so we're going to lower the commission on the dwelling fires to 8%,
Okay.
on the commissions down from 15. So it's one of those things where, okay, well, maybe now we go in, we take our dwelling fires, we move them somewhere else. Maybe we have this other carrier over here that's paying 22.5% on the dwelling fires. Well, if you're wanting dwelling fires, then you're going to want to go in and build your compensation around whatever it is that your agency wants. The other thing is go in and take your goal for your agency. So take your 10-year goal, 5-year goal, and then take that to a 2-year goal and 1-year goal, break that down into monthly numbers, and then break it down to a weekly number. This is the weekly productivity that I have to do in order to reach this goal. This is how many people I have to have. This is what I have to do to break through this ceiling. Because the reality is, when we talked about this last week in part 1 of this, which is what I refer to as your terminal velocity. Each producer is going to have a terminal velocity of the amount of premium they'll be able to sell based on what they do and based on attrition when you're looking at your insurance policies. So if you have an 80% retention ratio and you have someone that's selling, say $240,000 a year in new business, $20,000 a month. Well, if you have an 80% retention rate and that producer has now built $1 million book of business, they're losing $200,000. The amount that it's going to take them to break over that $1 million or break over a $1.2 million is going to be substantially higher, because now they either have to change the type of business that they're going after or work harder to go in and write more business in order to break through. As the agency, for you either do one of two things. You're either going in and hiring new producers to help break through the ceiling that you need, or you're going to go in and do on what we're going to go into on other episodes is acquisitions, right? You're going to go in and find other agencies that you can buy to actually increase your revenue and increase the amount of premium that you have. So there's a lot of different avenues to actually go down to get your book, to get to your goal. But for a lot of people, there's a lot of pride. Like for myself, there's a lot of pride in building a scratch book of business to where we needed to be. Now, I needed the help. I need the help in order to get through that glass ceiling, because the reality is, guys, there are glass ceilings. And as a scratch agent, there's only so much that you can do without going in and starting to do acquisitions, partnerships, anything else like that. I mean, you could do it, right? You can go in and do a whole bunch of different offices and go in and hire a whole bunch of different sales agents and things like that. But it's a lot faster and easier to go in and do acquisitions in that process. And like I said, we'll get into that on another episode. But as you're going in, you're building out your compensation plans. There's multiple different type of compensation plans. So like for my more seasoned producers, I have them on a straight 50-50 split. There's no base. There's nothing like that. You eat what you kill, but it's a straight 50-50 split. And for them, it works out really well. I used to go in, have them on a 60-40 split. So 60 new, 40% renewal. And then we had a base bonus. But what we calculated is, number one, it's easier for me to go in and just do a 50-50 split because we're looking at simple calculations, right? What I found was a lot of my time, because the amount of producers that I had, was spent on calculating and processing payroll, and going through all these different carriers and figuring out who wrote what and all this other kind of stuff. So I just found it a lot easier to go in and just do a 50-50 split, to the suggestion of my business partner. We went through and we calculated it out, sent it out to my producers, and they go, okay, you know what? Yeah, I agree. We'll make more money and I gain more time.
Yeah, here's an option too. Two things. One, Devin was talking about dwelling fire policies. Shameless plug here. Go back and listen to episode 1 of our podcast, because we talk about niche markets. That was exactly where Devin was going with that. So if you haven't listened to episode 1 yet, go back and listen to it. But the second part is, a lot of times what you may do is, especially if you're giving them the base bonus, a draw, whatever you want to call it, a lot of times you don't pay renewals for the first couple of years. Get them built up, get them that sales muscle built. But then when you go to them and say, okay, we're going to make a compensation change, we're either completely taking away the base or reducing it drastically, but you now get renewals.
Correct.
So that gives them the incentivization to take their business book further, to work harder, to sell more now, because they know in 12 more months, they're going to start getting 40% or 50 or whatever you come up. So a lot of times agents won't pay any renewals the first year, 18 months to 2 years. They'll pay them a base of some point, and then they'll give them new commissions. And then over time, they'll increase the new a little bit, and then all of a sudden take the base away, but give them the renewals. But that incentivizes to sell.
You brought up a good point. Where do you start? Because many of you already have a compensation plan, and you're paying your folks already. You got revenue coming in, and we're just throwing a whole bunch of word salad at you for opportunities to do other things. One of the things I would say is take your compensation, all your revenue for 1 year, break it out into new and renewal. Once you do that, then take your expense for just your payroll and figure out what that percentage is against your new and renewal comp.
Yeah.
And then what I'd like you to do is take that percentage against just your new, and then just your new comp.
Mm-hmm.
What you're going to find out is, based on your compensation, for those of you who are paying more salary, there's hardly any new coming in, and you're paying them all out of your renewal, and
That's right.
everyone is happy in your agency, and you're the one who's getting yelled at every time you go home to your spouse about why you're doing this. But
Mm-hmm.
when you see that, when you get your compensation right, you're going to actually make more room in that renewal comp, which should be yours, and you're going to push it towards that new comp, because that number is going to go up. And I just remember historically we would be talking to agents like, oh, I'm not generating enough revenue, hire more staff. Oh, I don't have enough quotes, we'll hire more staff. Well, don't hire any staff until you know that the staff you have on the books is actually generating revenue to the agency.
Absolutely.
Yep.
When we did that, we found out, it's like, here's your fundamental problem. You're paying this person $30,000 a year, and you've written, $1,500 of new business. That's actually a real story. $1,500 of new business.
Wow.
But you've been an agency for so long that you had this big, huge base that you literally babysat folks while they, did whatever they did all day long. And as you know, T-Docs and all the follow-up things that customers need, the length of time it takes to complete it depends on what time of day I have and how much time left I have in the day before I go home, if I'm comfortable with my salary. And then I make you feel guilty about the fact that, oh yeah, well, you're leaving in that car, and I got to go get an oil change, but I might have to wait a couple of. No. Go back to that compensation plan, take a look at what you're spending in comp, and figure out how much of that new business comp is coming in. And the larger that new business comp is to your comp payout, the better off your agency is. The smaller it is, the more you need to change your compensation structure.
Absolutely.
Yep.
And, one of the points I want to make on this, guys, is you as the agency owner, this is very important. You as the agency owner need to be the producer. You need to be the producer inside of your agency, because the reality is if you've never produced, if you're listening to this and you're in, because I've had conversations with folks that were office managers and operations managers, but they never really sold anything, but they go and they see you as the agency owner walking in, walking out. It's like, oh, well, you know what? I can do that. But, at the end of the day, you have to have producers in there to sell. Well, if your producer realizes that you as the agency owner have never produced and you've never sold anything, you're relying 100% on that producer, and that producer knows that. So it's very important for you to be the example of the producer. It's funny because I always joke with my business partners because I'm like, you're my top producer. Now, for me, I usually sell anywhere between $40,000 to $50,000 a month in new business. He usually sells anywhere between $150,000 to $200,000 a month in new business, which is a lot, right? That's a lot. But he's built up the network, he's built up the referral, he's built up that to where there's no problem. Like that's just normal. It's like Chuck says, that's his muscle. That's just what he does. And then I have producers in my office that they sell anywhere between $60,000 to $80,000 a month in new business, and they've just built up those referral partnerships. They've built up their platform. But you, as the agency owner, need to be the producer, the main producer, so that you can set the example inside of your office. You have to be that person, because if you're the one that's just in there to collect the check, you're working in the business, but not on the business.
On the business.
Right.
Yeah.
Okay.
Yep.
You have to be the one working on the business. You can't be the one that's always in the trenches. So you have to have that delicate balance. That's why, like, for me, when we're looking at my office, the way it's set up, me and my business partner, we're selling, but we're also running the business itself. We're helping to take care of the day-to-day operations. We have one operations manager, an office manager. We have a commercial office manager, a personal lines office manager, and then we have the CSRs that's underneath them. We have licensed CSRs and non-licensed CSRs, and then we have our sales agents that's in there as well. And all of our sales agents, we have them all on a 50-50 compensation schedule. Now, when we go in, we hire new guys, we put them on a 50-50 split. But what we do is we go in and we have the draw that's in place.
Mhm.
And that draw that's in place is they have a certain number that they have to hit in order to hit that draw. Once they hit that number, they're able to pull the draw. Anything above that number, they're able to get compensated. But it's important to make sure that you have those numbers and have those things in place, because at the end of the day, like we said, when we have a brand new producer that's starting out, they have to have something. They can't just be on that 50-50 base, because unless they have a pile of cash that's sitting in there for them to be able to survive off of,
They
which
can't pay
most of
rent.
them don't, they
Yep.
have to be able to survive. So you have to be able to provide something. But at the same time, there has to be some pain. There has to be some motivation for them to go in and sell and produce for your agency. You can't just supply this big base salary in hopes that they're going to do it. And lastly, but not least, is you have to go in, you have to look at your commission numbers. You have to look and say, okay, well, if they're selling $30,000 a month in new business, and that $30,000 is based off of $1,500 or 15% commission, you're looking at $4,500 or so, right? And is my math right on there? Probably, it probably isn't.
It's close.
It's podcast, correct?
It's somewhere in there. Yeah, but I think it's like $4,500.
Yeah.
I'm trying to pull it off the top of my head. But if you're at 10%, right, it's $3,000.
Right.
So you have to go in and look, say, okay, is this going to be enough for my agency to be able to make money? Now, when you're looking at brand new business and you're looking at the compensation, always look at it as, I just need this to break even. I need them just to not cost me anything. When I'm looking at the salary and I'm looking at the commissions, I want to break even. And then my money as the agency enters on the back end with the renewals. So as those renewals are hitting, you're actually making money, you're generating revenue, you're generating profit off of that agent. Now for us, our agents are basically, we just pretty much break even on our agents. And for us as the agency, we do a lot of acquisitions. And then for us, our revenue and everything really comes off of the acquisitions that we've done over the course of these last several years.
So I do want to caution the agents real quick. Chuck said something there about, how you kind of have a good renewal base coming in. You don't monitor stuff. The number one reason for business failure is business success.
Mm-hmm.
What happens
Yes.
is you start being successful. Now, we're not going to tell you what success is. That's different for every single person.
That's right.
Your version of success is different than Chuck's, than Devin's, than mine. But when you start getting successful, you start getting comfortable. Comfort will kill your business because you stop
right.
doing the little things. You stop looking at the person you're paying, Devin, $30,000 base to that produced $1,500 of premium. Well, we've got so much money, we're comfortable. So I want to challenge you to look at it as, yes, I'm successful in the areas I gauge. I can't take my foot off the gas. I
That's
got
right.
to keep doing the day to day.
So it's funny you say that because in my mind, you become comfortable when you're focused on the wrong thing. So going
Mhm.
exactly with what you're saying, if I'm focused on the revenue coming in, then what's going to happen over time is things are going to change because that number is going to be that comfort number. But if I'm focused on the activities that gets the revenue, I don't think you're going to get comfortable because the question is, okay, they can speak to 8 people. I wonder if they can speak to 12. Or, you know what? I'm going to hire someone else because now I know I can afford this person as long as they're trying to sell to 10 people a month. So now I'm going to start focusing on how many folks can I get to talk to 10 people a month paying at this amount that grows my number. And
Mm-hmm.
that's how you see that bend. So stay away from those things which are outcomes and stay focused on those activities because you keep doing those activities and you stay type A, you're always want to know how much more can I get out of that activity that will drive that revenue that is going to make me more money in the end. And that's how you see these folks who now have, you know, 10 million, 50 million, $100 million books because they were always focused on, wow, if I can do this with these 2 people, now I'm going to duplicate that and do it with these people,
Correct.
whether it's
Mm-hmm.
acquisition of books or whether it's acquisition of sales producers. That's the biggest piece there.
And guys, let me end on this, and we'll talk about a little bit about where we're going to go with our next podcast and kind of our next episodes. But what I want to tell you guys is this: when we're looking at your compensation, when you're looking at the eye on the prize, it's really based on your individual goals. If you want to build $100 million agency, take the tools that we're providing to help build that. If you're looking to build a $2 or $3 million agency, that's fine. Take the tools and apply it into your agency. It is solely based on you, what you want to accomplish as an individual for yourself, for your family, for your spiritual life. Everybody has a different motivation of their why.
Yeah. What's
Why
your
are
why?
they doing this?
Yeah. You've got to
Find out
find the
your
why.
why.
Yep.
Find your why, apply it to your life, apply it to your business life, and then set your goals and set your standards from there. Well, follow, listen to take some of the ideas that we're providing here on the compensation side and apply it in there. Our whole goal here, guys, is for you not to have to overspend, be able to retain more revenue, retain more profit, to listen to this podcast, to learn some of the information that we're providing, and to earn more revenue and
Mhm.
earn more money. Thank you guys so much for your time. We'll see you next week.